The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Anna Christina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to the Get Rich Slow Club podcast,
where we take you from beginner to confident investor,
where we can teach you everything you need to know about investing.
So come get rich slow with us.
I've got Natalie Lennon back with us here for part 2 of our tax questions. So last episode we did kind of an intro to tax basics thing, and now we're going to do your community questions. I got them all on Instagram from a question box. Do you want to do a quick little intro of who you are for those who haven't listened to the last episode?
Sure. Natalie Lennon, founder of Two Sides, a boutique accounting firm in the south of Sydney, and Two Sides Academy, business focused on educating accountants and bookkeepers, host of Totally Bossing at the podcast, and I've won a few awards. And I also really like, helping business owners and individuals understand tax and just really explaining it in a way, so they can learn and DIY if they want to.
DIY, yes. Yeah. You are big on TikTok as well. That's how I found you.
Yes.
Yeah. What's your TikTok username?
At Nat Leno, so NATLENNO.
Perfect.
Yeah.
We start every episode with a money win, money loss. Do you have one for us today?
So probably a money loss would be, I bought a new camera, one of those DJ Osmo 3 or whatever, to do content creation. Looks great. But now I've defaulted back to using my phone because I'm too busy to learn how to use it.
Yeah, it's a whole extra step. I felt that as well. Like your phone, you just put it up, you record, it's all easy. But a camera, you've got to record and then download it onto your laptop and then actually edit the footage. It's a lot.
Yeah. So I think I'll get there. But it's an $800 camera that's now just sitting. I gave it to my husband to use for the moment.
Okay. You'll have to let me know once you finally get to use it. It does look like so much crisper and so much better.
Oh, the footage is amazing.
Yeah.
But just, because I'm so used to using my phone, every time I go, I'll use it and I go, I'm too busy, I just divert back to my phone.
Yeah. It's like when you buy something really, like if you wanted to buy a fancy bit of gym equipment, but it required you to put on clothes and set it up and bring it out. I've got a walking pad actually. And when I would put that under my bed, I would never get it out.
Yeah.
But now that it's just always there, I used it a lot more.
Yeah, I think I've used mine a couple of times and now it's in the spare room. Yes. I need to try and move it back in.
Yeah. When I lived with my parents, I had a treadmill, and because it was just set up, I would go on the treadmill all the time. And I didn't realize how much having to set up the walking pad would stop me from using it.
Yeah.
Not ideal.
No, we're creatures of habit. And sometimes we get a little bit lazy.
Yes. My money loss is I missed the bus to Sydney the other week. And I had to pay $50 for a whole new bus ticket, which is unfortunate.
Oh.
Yeah, I've had an issue with Ubers cancelling on me quite a bit lately, especially in the mornings.
Yeah.
So we were trying to be half an hour early, but 3 Ubers cancelled and then we missed the bus by 2 minutes. Yeah.
So we had a similar thing with Uber. We were trying to, catch an international flight and we had 2 cancel. Luckily, we were super early and we finally got one and we were okay. But I don't know what is with that.
It's so stressful.
Yeah.
Yeah. They get so close as well. I feel like I'd be waiting 8 minutes. It would be a minute away and then they just cancel. And it's you're pretty much at my door.
Yeah.
Not a fan.
No.
Not a fan. That's okay.
Do better, Uber. Do better.
Yeah. Well, we'll just have to leave hours early now.
Yeah.
Yeah. That's okay. Luckily, it wasn't a flight. I haven't missed a flight yet, but I've officially missed the bus. Oh, well, I hate getting the bus too. So just a sign I should be driving instead.
The universe telling you not to catch the bus.
Yes. Let's dive into some of our listener questions. The first one we got is, all spare cash flow is going into shares. What's the best strategy to cover a tax bill due to gains?
I would always recommend speak to an accountant and make sure that you're putting some of those gains aside for tax, because even though you might not be, you're not taking the money out and putting it into a bank account, so you're not essentially feeling like you're realising those gains, you're being taxed on them. So if you're not putting that money aside when it comes to tax time, you might be getting a bit of a shock.
Yes, I find this with dividend reinvestment plans. Some people think that you don't have to pay tax on them, but you do. And if you are reinvesting those dividends, you will need to find the money elsewhere.
Well, they forget that they're earning that money because it's just being reinvested. Yeah.
And it kind of says in this question, all spare cash flow is going into shares. So you can kind of stop putting all the spare cash flow into shares. Yeah. Just save some. If you want to be conservative, save, 30%, put that away and then you've got that there.
Yeah, that'd be plenty.
Yes, amazing. I'm investing weekly into Perla, but haven't taken any money out. Do I still need to pay taxes?
Yes. So the same thing applies, is that you're reinvesting any earnings that you've got. It's more earnings, income, you're going to be paying tax on it.
Yes. So if you get dividends, you'll be paying tax on it.
Correct.
If you haven't sold the shares, you won't need to pay capital gains. So shares are taxed in 2 different ways, on capital gains, but also on dividends too.
Correct.
So maybe you've bought Tesla or something, for example, that hasn't paid any dividends, then no, but it depends on what you've earned.
Yeah.
I've invested into Spaceship and Sharesies. Info on what to do at tax time. We covered this very quickly in our last episode, but just a quick recap. What will they have to do?
So making sure that your TFN is listed with your account so that then all the income items will automatically flow through to your tax return. So if you're doing your tax return yourself, you'll have to make sure that you've waited until all that information has flown through to your tax return. So double checking that the income in your tax return matches the income. Don't just go through and click the buttons. Sometimes it can take until, maybe August for that information to all flow through. And if you haven't put your TFN on your account, then you'll have to wait until you actually get your physical statement so that you can do your tax return from that. And then you'll have to manually put all those figures into your tax return or your accountant will have to manually put it in.
I haven't personally used Sharesies yet, but Spaceship, they kind of just send you an email and you can download your statement that way. Sometimes you have to request it. I've done that with Raise as well. You can go in and say, send me my statement. I assume Sharesies will be the same. You can either find it or request it as well.
And a lot of people forget. So that's why it's always good to put your tax file number on every single investment that you have so that come tax time, it's there. Because we see that a lot too. People forget about these things and then we do the tax return and it gets missed if it gets done too early and then nobody knows and then, the ATO can amend your return later. So if you're getting a refund and then you spend it, then the ATO goes, hang on a minute, no, you've got more income, you've got to pay it back.
And do they take a withholding tax if you don't give them your tax file number as well?
Yes.
Yeah, so they take the highest tax rate, which we don't want.
Yes, no, we definitely don't want them doing that, no.
This one's about whether or not they should see an accountant yet. They said, if you only have a pay-as-you-go or PAYG job and 30K in shares, is it worth seeing an accountant?
So I guess it depends if that 30K in shares is earning money or not. And then it also depends how good you are at researching and understanding, the tax rules. I would always recommend to see an accountant at least once, get some advice, and then if your circumstances don't change, you can generally sort of just copy it year on year. But then if the tax, other tax rules change that you might not know about and you haven't read about, then you probably should see an accountant as well. And look, a couple of $100 to get your tax return done, even if you did it every couple of years, just to make sure, you're on the right track.
Yeah, and it's a deduction as well, which is good.
Yeah,
I first saw an accountant when I bought my apartment, but that was pretty early on. It was like 4 years ago now. And it's definitely worth it for me as soon as it gets slightly more complex.
Yeah.
And if you're not sure, just pay for it. It can be pretty cheap.
And especially if your circumstances change as well. So I think there was a lot in the media last year about a lot of, people doing side hustles and having to pay a lot of tax. And they didn't go and see a lot of OnlyFans creators earning hundreds of thousands of dollars and having big whinge that nobody told them they had to, put money aside for tax.
Yeah.
Well, if you don't go see an accountant, how they, I don't have a crystal ball where I go, let me just ring all the people that are on OnlyFans and let them know they should have an accountant, So, whenever your circumstances change, always seek some advice.
Yeah, and if you just have a regular job, it can be pretty simple, but as soon as you have a business, it gets really complex.
Yeah.
I changed from being a sole trader to a company kind of a year ago now, and that was a bit tricky for me. Like I feel like I know a decent amount about money, I can research stuff, but even just changing the systems, having to register for GST, not being late for that, like there's all these little rules there too.
Yeah, definitely if you're in a company, you should always speak to an accountant. Don't leave that. I've had a few clients lately or new clients come across who are in the second year of business and they haven't done anything, and now it's quite a costly and stressful thing to try and fix it all.
And I find they're not as lenient either. They just fine you so quickly if you were late doing something. They're like, here's your fine.
Oh, look, once you go to an accountant, like we can generally go, look,
sorry.
They didn't realize, sorry, let us off once and we're going to fix it all now and get it all done, and they're generally pretty good. But if you just keep leaving it and not really following the rules, then they will hit you pretty hard.
Yeah, because I didn't register for GST when I should have. I thought you just kind of had to do it before you did your tax return and I'd go and pay it. But it's like 3 weeks after you earn over 75,000, is it? Yeah.
Yeah.
So I got fined for that, but I called them, I said sorry, and then they gave me a refund. So that was good. But now I know.
Yeah.
Yeah, it's hard because no one teaches you those things. Like there's no rules around I guess there might be courses these days, but it's not like, hey, you've started a business, do these 5 things now.
No. And, as accountants, we're always trying to advocate that there should be some sort of test for people to get an ABN.
Yeah.
It's so easy. You just go in and get an ABN. Anyone can do it. And then what happens is there's no one to tell you, you should do this, you should do that. And then it can be too late. And then, people get very stressed, and we don't want that either.
I have a director ID now. That was pretty easy too. You can just be a director now. Yeah. That's fun. It all just seems very official. And for my company, I am the treasurer and the secretary and the shareholder. So all these fancy titles that go with it.
I think we're actually one of the easiest countries to start a business as well. So I think like in America, it's really, really difficult, you know, to start a business, and obviously you've got all the different states doing all the different things. But yeah, in Australia, you just go onto the website, set up an ABN, off you go.
It's free. Yeah. There's lots of companies trying to charge you for it as well. So be mindful of those, but it is just free.
Yep.
This one kind of relates a little bit. As a person with a company, what is PAYG? Who gets GST tax?
Okay, so when you're in a company, there's a couple of taxes. So you've got the GST, which is your goods and services tax. So once you earn $75,000 or more, there is some exemptions, but let's just look at the high level here. Once you earn that, then you have to register for GST. So you collect 10% of all of your sales and you pay them to the ATO in your quarterly BAS, and you can take off any GST you've paid from other providers that are registered. Then you've got pay-as-you-go withholding. So when you've got a company, most of the time you're going to be an employee of that company because that's the main way you're going to get money out of the company. So you pay yourself like any other company would pay you if you're an employee, and then you're going to withhold pay-as-you-go withholding tax. So that will usually then get paid in a BAS, which is usually quarterly for small businesses again. And then you've got pay-as-you-go installments.
Oh my God, they got me so badly. Yeah. When I switched over from a company, because I had a huge tax bill when I was a sole trader. It was like 30 grand or something at the end, which is fine. I was prepared for it. But then they wanted me to do that in pay-as-you-go installments the year after as well, which wasn't fun.
Well, and then when you cross over from a sole trader to a company, then you have to cancel or vary your sole trader ones down. And then when you're a company in the first year, they don't know what you're making. So you're not paying any installments. So a lot of businesses get caught out on that too. They go a whole year in their company or even sole trader in the first year, not realise that the ATO doesn't know how much you're earning, even though you are if you're lodging a BAS, they should really know, but some of the systems don't actually talk to each other. And so then what happens is once you lodge your first tax return and pay your first tax bill, then they put you onto the installments for the next year. So whilst you're trying to pay the year before, then you're going to start paying installments for the next year. So it can all really spiral out of control real quick.
Yeah, luckily I had the money set aside to pay for it, but because I was slightly late because I was trying to figure out everything with my accountant, my bookkeeper, they said I couldn't vary the pay-as-you-go installments because it was after the due date for it. So I just had to pay them all and then kind of sort it out after that. Yeah. So it was that gap where I was like, wow, well, my money is gone, but I got it back, so it was fine.
So I think just on that too, so it's very important as well that if you are paying installments and perhaps your business takes a bit of a dip, that you can vary the installment down, but you have to lodge on time. And if you don't really know how to calculate that, then obviously reach out to an accountant or bookkeeper who can help you do that.
But make sure you're on time, definitely, because then you can vary it. But if you are late, it's just like, sorry, you have to pay it. Yay, fun tax. Yeah, it's definitely hard switching to a company, even just with cash flow stuff. Like I had such a good system set up with my sole trader, but now having to have like a company bank account and then paying myself and figuring out how much I want to pay myself, was before I would just kind of take the money that I wanted, but not anymore.
It's a lot more restrictive when you're in a company.
Yeah, you can't just transfer money without there being consequences.
No. Yeah. Well, you can, but then you've got to deal with it when you do your tax return and then it's a bit more of a mess. So my belief is when you've got a company, you should put yourself on the payroll and pay yourself a wage and pay super and all those things and just get into that routine so that at the end of the year, you're just paying tax on whatever the profit is that's left.
Yeah. How do you figure out how much to pay yourself initially? Like I struggled with that being like, oh, I can't just transfer myself random amounts. How do you kind of forecast that initially?
So what I try to do is sit down with a client and go, okay, well, how much do you want to draw? Number one, what do you need to live?
The dream income, $1 million a year. Yeah.
And then let's have a look at, let's do a cash flow for 12 months and let's see what's coming in, what's going out. And then let's set it. Because I think the other problem is if you're taking different amounts out here and there, then it can be really hard to know where your business is at because you're just taking money out willy-nilly. And then B, know how much tax is going to be paid because it's very up and down as you go along. So setting an amount and then maybe reviewing it every quarter, you know, when you're doing your BAS.
Can you pay yourself bonuses as well?
You can. Yeah.
Nice.
Well, it's your own, that's the thing. People will say to me, how much can I draw? And I go, well, it's your company. There's no limit.
Yeah.
But if you take it all out and there's no money left for tax and super, then you're going to be in trouble. And probably that's the other thing is that when you've got your own company, you have to pay your own super. And if you don't pay it, you can get penalised, even though it's your money.
Yes.
Because it's technically not your money, it's your retirement money.
I had this as well because my bookkeeper gave me an amount to pay and then he ended up changing something, so the amount changed. So I paid the ATO, but they returned it to me to pay back another full amount to them and that kind of got lost in communication. But yeah, interesting how they just returned the whole full amount to you to then pay the right amount back. That was interesting.
Don't get me started on the ATO systems.
Not very fun. Yeah.
No.
This one is fun. How come I turn a profit on my investment yet have to put in $200 a week of my own money? Bit confusing, this one, but I think the person means that their investments are growing from my understanding, but they're still putting in $200 a week ongoing. Is that how you read it too?
I thought maybe they meant they've got a rental property.
Maybe.
But so...
Yeah, answer it from that perspective.
Yeah, it's just a common question where people go, well, hang on a minute, especially at the moment with the interest rates going up and repayments are going up. And so a lot of people are like, well, hang on a minute, why am I putting putting extra money in, but my property is still potentially negatively geared, and how's that all working? And that's because when you're doing your tax return, you're only claiming the interest. You're not claiming the repayments. So I think what they were meaning is the property is positively geared. So tax-wise, they're making a profit. But cash flow wise, they're not, because they're putting more money in on their repayments.
Interesting. Explain that to me, because negatively geared usually means that you are losing money but you're claiming a tax benefit.
Yeah.
But positively geared is you are having to pay tax on your income. Is that correct?
Correct.
Yeah, okay.
Yeah. So what it will mean is, and there's two sides to this story. One is tax and one is cash flow. So for tax, you're claiming the interest on your rental property, but cash flow wise, you're looking at the repayment. So they're going to be two different things.
Yeah.
Yeah.
I hear so many people saying that they want to buy a negatively geared property because it's such a good tax strategy. Yeah. Do you have a reaction to that? Is that a great idea?
Look, I'm not a financial planner, so I'm not licensed to give the financial advice.
But you see all of the money side, I guess.
But I think it's silly. And I think it's silly when people do anything just to save on tax.
Yeah.
Like, don't rush out and buy stuff to save money on tax if you don't need it or you can't afford it.
Yeah.
But we just have this mentality of no one wants to pay tax.
But tax is good. Like, tax pays for so many things that we all use. Like, tax is a good thing.
Yeah, tax is a good thing. But I don't know, like, it's, you know, with the cost of living and everyone hates the government and all those things, they're like, I don't want to pay tax, and my friend doesn't pay tax, and why don't they pay tax? And I go, well, they might have a dodgy accountant.
They might be dodgy themselves.
They might not be making any money.
Yes, yeah. I see that quite a bit as well. And with negatively geared, you are losing money in the short term on something. Like, it's not something we should be aiming for. It's not a dream thing.
No, unless you're going to get capital growth. Obviously.
Yes, we hope for that.
Yes.
But yeah, it's dangerous going in with that mindset, especially if you don't have the cash flow to fund it in the next 10 years until it does grow enough to sell it.
Yeah, I agree. And I've actually seen a lot of clients actually selling their rental properties in the last 12 months because of the interest rates going up so high, and that, you know, they don't have the money to make the repayments. Yeah,
it's gone up so quickly. It's a bit scary to see when people were forecasting based on 2% interest rates, and now it's, raised a lot since then.
Yeah.
Fun times. Yeah. Best strategies for minimizing tax on FIRE retirement. So FIRE is financial independence, retire early.
So I think that's more of a financial planner question, but I think, like we were saying before, is it having a good balance of different, you know, investments, ones that are going to have capital growth so you can retire, and not just focusing on the short-term tax deductibility of investments.
Yeah, and having income as well. I know with a lot of property, if you've bought one property, it's hard to get income from that one property, especially if you're living in it, versus having shares that can pay you dividends and a mix of stuff like that as well. We did an episode with Dave from Strong Money Australia recently. He retired at 28, and I think he had, a few properties, but he ended up selling them and buying shares because they just didn't have the income to fund his retirement. So that's a really interesting one. Yeah.
And I was an accountant, I'm fairly conservative, and I do have some shares, but I feel like I start looking at them and I get obsessed, and I feel it feels a bit like gambling to me.
Yeah.
I don't know, like.
It's hard because like housing or property feels more risky to me because you are taking on a massive mortgage to buy it. You've bought one property, you're not really spreading your risk, but you can see the house, like it's there, you can see it. You're not seeing the price change all the time as well. With shares, you watch them go up and down. So it can definitely feel a bit more risky when, to me, I feel like property is risky.
Yeah, so it definitely comes down to personal preference, I think.
Yeah, definitely. And having a mix of both of them as well. What do you say your role is compared to a financial advisor? So more of the strategy stuff in terms of retiring, that's an advisor. How would you say you help in that situation?
So we look at more, you know, things from more of a tax point of view. We do look at, you know, strategy. So if they are looking to retire in 5 years, we will look at it from a tax point of view and a business point of view. So, you know, how much money do we need to build up the reserves in the business? How much, what's the strategy for retirement? Are we going to bring someone else in? Are we going to sell the whole thing? Do we need to keep retained profits and franking credits so we can pay dividends and stagger them over the years? So more of a tax focus, whereas a financial planner will look at everything. So the super, the other financial investments like properties and all those other types of things. And then we will sort of come together and look at how that all fits together tax-wise, because there are tax benefits when you do sell your business. There's some small business concessions and ways to essentially pay no tax when you're selling your business.
Really?
So we would all work together to do that. So definitely get an accountant and a financial planner that play nice.
Yes, that sounds like a great idea.
Yes.
It seems like the tax system is geared towards being more positive for business owners. Do you think that's true?
Oh, there's a few business owners that probably wouldn't agree with that.
Because like there's the company rate, which is less. You don't have to pay the huge tax rate. You're just saying there's concessions for selling your business as well. Like there's that for property too sometimes. But yeah, that's awesome that exists as well.
I think the government definitely, over the last 10 years or so have had a real focus on helping businesses because it's the lifeblood of the economy. My personal opinion is that, our tax system is good for small business, but there might be a few people that really disagree with that.
Yeah, I found it a lot easier to claim now compared to when I just worked a normal job, I guess. There's the instant tax write-off or instant asset write-off. There's all of that stuff, which is good.
Especially when it was $150,000.
Yes, not that I was ever buying that much stuff, that would be nice. No. We're going into super now. Does making your own contributions to your super via salary sacrifice reduce your tax? First, what is salary sacrifice?
So the way salary sacrifice works, especially for super, means that the super comes out of your pre-tax salary or wages. So basically, let's say you're getting paid $100,000. Instead of getting tax on that $100,000, if you're paying the $30,000 into your super, which is the cap for this year, you would get tax on the $70,000. So essentially bringing your income down.
Yeah, awesome. It is definitely a hack, salary sacrificing into super, but it is locked away for a long time for some of us. Depends where you are. But it's such a tax hack. I want to get more excited about it, but it just feels too far away.
I can definitely relate to that. So I turned 40 this year and I only now started thinking more about my super. So previously I've been like, no, I want to pay off my home loan and buy investments and all those things because, the super rate hasn't really been that good over the last couple of years. But now that I'm getting a bit older, I'm starting to think, okay, now I'm probably over halfway to retirement. So I need to start thinking about that. And so, I'm sure, you could attest to, as a younger person, definitely the earlier you start on that, the better. I think we went and saw a financial planner maybe a couple of years ago and they said to have the same lifestyle and income that I have, I would need 10 rental properties. 10,
wow.
And I was like, I don't think I'll be spending as much when I retire, but that's a lot.
There are the super retirement standards that you can check out, and that's quite interesting. It tells you how much super you need to live a comfortable or a modest retirement. Comfortable is not really that comfortable in my opinion, but it assumes you have a paid off home as well. So it's definitely worth having a look at how much you'll need, seeing if you're on track. And if you don't have a fully paid off home or aren't planning to, definitely allowing for more. Even though it's not exciting, it does take a while to save that much.
Yeah, it definitely does. It's definitely nice now watching my super balance go up.
Yes. Yeah, satisfying. It's good when I started thinking about it a little bit more as my money too. Initially I was like, oh, it's not mine yet. But as soon as I started including it in my net worth updates, I was like, oh, it's mine. It grows. I'm going to be in control of it.
Yeah, nice.
Trying to get that.
Yeah.
We had another one around if it's worth paying someone to do your tax. I feel like we've covered that now.
Yeah.
Usually yes.
Yeah.
Unless you want to try. But I don't think it's a wrong thing to go and pay someone, even if you're just doing it the first time, to try and see how they do it.
Yeah.
What can I claim? I fly 6 to 8 times a month for work, but I'm not a flight attendant.
So if your employer's not reimbursing you for airfares, you can claim them. You can also claim accommodation and meals. And if you get paid a travel allowance, you need to keep records to claim against the travel allowance if you're claiming over the recommended amount. So the ATO has a range of recommended amounts for meals and accommodation, all those types of things.
Okay.
So if you're just claiming that amount and you get an allowance, then you don't have to keep any record. But if you want to go over that and claim the actual amounts, because maybe they're a lot more, then you've got to keep all your receipts and things.
Why do I have an outstanding tax return on my ATO account? I'm pretty sure I was too young to work.
So this is a good one. This is one that us accountants are very frustrated with the ATO for doing. So what they did with their new Butte system maybe a year or two ago, they started to data match all the stuff. So what would have happened is when you first got your tax file number and you probably weren't working enough to hit the tax-free threshold, I don't know why the ATO now decides they want you to do a tax return for that.
Oh, okay.
So you can go into your MyGov and just I think you can hit a couple of buttons and just lodge it so that it just disappears.
Interesting. So they just randomly brought that out last year. Really?
Yeah.
Oh, great.
Maybe the year before. I lose track of the years. But they all just did start popping up. And so we just say to our clients, just go in and lodge it through MyGov. It's probably got nothing in it. But it's just, I know, some sort of completeness thing that the ATO want to do to make sure that they're ticking all the boxes.
I guess if you had a savings account in your name as well, you would have earned some interest there too. So it might even just be like $100 of interest you earn as well. Yeah, crazy. Yeah. I'm paying council rates next financial year. Can you include it as a tax deduction this financial year?
If you prepay it, yes. So you can prepay expenses up to 12 months in advance and claim them on your your tax this year.
I didn't know that. That's a nice hack if you've earned a lot of money this year. Yeah, nice.
So you used to be also able to, well, you still can, but I don't know if the banks let you do it, prepay interest. So it used to be a strategy where some people would prepay their interest on their rental properties and claim that deduction in advance. Yeah, but now with the interest rates going the other way, you probably wouldn't do that.
Yeah, okay, interesting. Yeah. That's fun. If you know that you've had a bigger year, like you've sold something, sold shares, sold a property, something like that.
Yeah.
That's fun. Ooh, all these hacks.
Yeah.
How do dividends on US stocks get taxed?
So generally what happens with those is when you get your dividend statement, you'll notice that there's been a little bit of tax deducted over in the US. And then what happens is Australia's got a double taxing agreement with the US. So when you put that in your tax return, you do get to claim that credit. But if you've got overseas shares, I always recommend getting an accountant to do it because it's called the foreign income tax offset. And it's a bit of a manual calculation on how it's worked out.
Okay.
Yeah, so it's a little bit complicated.
Yes. Yeah, definitely think if you need to be buying US shares, I see some people buying US ETFs, but you can buy the same thing listed on the Australian Stock Exchange. So maybe see if you can do that instead.
Yeah.
But yeah, it does get a bit tricky. And there's also a form you have to fill out. It's like the W-8 Ben form or something. So you don't pay withholding tax in the US as well. Some brokers do it for you like Perla. But I don't think CommSec does. So definitely make sure you fill that out. Otherwise they tax you at like the 47 or whatever the highest rate is. Yeah.
Interesting.
Yes, all these forms to fill out, but if you can avoid it, avoid it.
Yeah, especially with the US. They're theirs is one of the most complicated tax systems.
Yeah, and you just don't want to do extra paperwork.
No. And I think I haven't seen one of those for a number of years. That's probably why.
Okay, yeah, because like a lot of people will see on TikTok they want to buy like VU, for example, which is an S&P 500 ETF, but it's listed on a US stock exchange. But you can just buy IVV, which is listed on the Australian Stock Exchange. Same thing. So it makes it a lot simpler that way.
Yeah, well then overlaying the other complexities is then converting the income.
Yeah.
So you either convert it at the rate on the day or the ATO has got, the average interest rates for the months and the quarters and things, so you can convert it that way. But yeah, once again, it's a bit complicated.
Especially if you've not got that much invested too. You don't want to do all this extra work.
No.
Yeah, definitely. Another business one, we don't draw wages from our business but want to contribute to our super. How can we do that?
Now, if you're not paying yourself any wages, you're obviously not on the payroll, so you're not going to pay the super that way, although you can set yourself up on payroll and just make the super contribution the same way as you would with your employees. Okay. Yeah, which can be a simpler way to do it, especially if you've got zero and it's through the automatic super clearing. But the other way is to let your super fund know that you're going to make a tax deductible or concessional contribution and you're filling what's called a notice of intent to claim. And that needs to be done before the 30th of June so that they can classify it correctly, because a lot of people forget to do it and then the ATO just assumes it's what's called a non-concessional contribution and then you can't claim the tax deduction. And they're really strict with doing that before 30th of June as well. Okay.
Do accountants do that form for you if you're working with them or you have to do that?
Usually you do it yourself, although some accountants would probably help you.
Yeah, I guess if you're seeing an accountant after the 30th of June, you need to make sure you've done it beforehand.
Correct. And then like we used to help our clients do it, but then I found some super funds don't actually accept that form. They have their own form or they have a way you could do it online. So once again, it's a bit complicated. So we say just bring your super fund and ask them.
Out. Yeah. Or just pay yourself through Xero like normal. Yeah, okay. Yeah, Xero is amazing. I like it. Yeah.
Awesome.
Final question. I'm a uni student who made $29,000 this financial year. Is it worth trying to find deductions?
Well, it depends. If you want to save, you're probably going to pay tax at about 16%. So if you want to save 16 cents in the dollar for every deduction that you make, then go for it. But it's probably not worth it. But if you're a uni student, I guess you need all the money you can get.
Yeah, I would flip it the other way and say, it's you're saving money. Yeah. Like if you've got some deductions, have a look at the most typically claimed ones, try and claim the easier ones. Like don't spend ages doing it. But I think it's good to learn now before you get more complex and earn more money and have more things going on. So it's definitely fun. We'll make it fun.
And probably just to add to that too, if you're a uni student who's studying something that you're working in, so let's say, for example, maybe you're a trainee accountant, you're studying accounting, then you can claim some of your study costs as well. So definitely if you're in that sort of situation, speak to an accountant to see what you can claim.
If they bought a laptop, for example, could they start claiming it now and then claim the depreciation over the next?
If they're working in that industry, as part of the self-education
rules. So you could definitely use it for the next few years as well too. So definitely worth having a look at it. Yeah. Awesome. Well, this was heaps of fun. I feel like we answered so many questions.
There's a lot.
Yeah. Thanks for being the expert. Everyone should go and follow your TikTok. Is it Nat Lennon?
Yes. And be careful. There are a few spam
there's so many
accounts there.
We'll try and tag it in the show notes as well so you can find it there. Have you got a verified Instagram account?
Yes. Instagram's verified. So you'll find me on Instagram a lot easier probably than and TikTok.
I find that a lot easier. Go to the verified accounts first to double check because the scammers are getting way too good at the moment. But yes, thank you for joining us.
Thank you for having me.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invest or me at Ana Cristina.
This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.